Hello, I'm Alderman Professor Michael Mainelli. I'm proud to count myself a friend of Professor Barry Ryder. For 37 years, Barry has held the renowned Cambridge International Symposium on Economic Crime, and I have been delighted over a few decades to attend many of them. Although I can't claim all, I do have a fairly large collection of coffee mats and photographs. This year, as we know, we're holding these events virtually, and Barry's asked me to make a short recording for you expressing some of my thoughts on economic crime, who pays and should pay. And I'm going to focus here on anti-money laundering. This year, I happen to be Sheriff of the City of London. I was elected for 2019 and 2020, and unusually, the first time I'm told since 1228, I have a second year for 2020 and 2021. So I may be able to join the 39th Symposium on Economic Crime physically next year, circumstances permitting. Now, given that this is an academic event, I think it's important that I stick to the flavor of it, and I have put together, therefore, a curriculum argumentee to help Barry with his Jesus College issues. What I would like to cover in the few minutes granted to me is to look at the noble goal of anti-money laundering, the ignoble results, who pays, who should pay, and what might be done. I hope that I can leave you in this short time with a few thoughts. Well, it is a noble goal. Firstly, crime is something that we all wish to resist and suppress, and indeed, perhaps, if that were possible, eliminate. But after nearly 40 years of economic crime symposium in Cambridge, fighting economic crime still means wildly different things to various people. To some, it's fighting criminals, others terrorists, others tax evaders. To some financial institutions, it's a lovely barrier to entry. To challengers, a minefield. To lawyers, accountants, and consultants, a gravy train. To technologists, an opportunity. For consumers, a disaster. We are not losing the plot. We have yet to find the plot. And it all focuses in many ways around identity. Who are you is probably the world's most frequently asked question on a website, in a nightclub, at an airport, or in front of a bank counter. Everyone wants us to prove that we are who we say we are. But something like 2.4 billion people worldwide can't answer that question to the satisfaction of the authorities, about 1.5 billion of whom are over the age of 14. They cannot prove their existence and access society's registries. And while they certainly know who they are excluded from property ownership, free movement, and social protection simply because they can't easily prove their identity. They are more exposed to corruption and crime, including people trafficking and slavery, and further harming the poor due to concerns over money laundering fines. Over 75% of large banks, led by US and UK banks, have withdrawn materially from correspondent banking relationships, depriving developing countries of trade finance and remittances. For the poor, Hernando de Soto, the famous Peruvian economist, famous for his work on the informal economy, observes, without an integrated formal property system, a modern market economy is inconceivable. And a modern market economy is inconceivable itself without proper identification, because there are no proven holders of property rights. Now, for the rich, regulations around anti-money laundering, know your customer, and ultimate beneficial ownership increase legal and regulatory costs and hassles too. 90% of businesses responding to the International Chamber of Commerce Global Trade Finance Survey pointed to anti-money laundering as the most significant impediment to trade. Now, hassles for the wealthy seem a world away from the daily toils of the great undocumented, but the solution to their problems might be similar. Identity systems, potentially based on smart ledgers or blockchains. These are effectively multi-organizational data structures with a super audit trail and some embedded code. And these allow groups of people to work together, validating transactions across a network of decentralized computer systems. I'm not focusing here at all on cryptocurrencies, just on the applications of these smart ledgers. And whereas a central database can lead to a natural monopoly that everyone has to use, The fact that smart ledgers are mutual, i.e. held in common, means they can be structured to be harder to exploit as natural monopolies. Well, we've seen some of these. We've got prototypes, such as my firm's Yen. We have a system called ID chains. There are many others out there. The government of Estonia has gone further than most in actually having a functioning system, getting on for well into its second decade. So why aren't we using these cooperative systems? Well, I believe it's a triumph of narrow interests, often monopolistic and political, over society's interests. You can see here that what we've achieved is ineffective, costly, overcomplicated, over-teched, anti-competitive, and has very little feedback. And I would contend that anti-money laundering at the moment doesn't work. Even worse, I produced this report for the City of London Corporation with my team some 15 years ago, and little has changed since. So the fundamental conflict here at the base of it is, rather than focusing on the commercial realities of life, we seem to have made financial institutions responsible for policing all legal financial boundaries globally. And frankly, there are very few things that don't result in some type of commercial transaction, and therefore drag financial institutions into an extremely wide and frankly irreconcilable network. So who pays for all this? Well, the answer is we all do. We are more efficient more inefficient as a society, and that's a cost that we should be, in my opinion, a little bit more riled about and a little bit more anxious to improve. But like many diffuse costs, it becomes an issue that is just not big enough in the interest of any one individual to solve, even though it might benefit society as a whole. So who should pay? Well, in my opinion, identity is a normal part of virtually all business processes. So we should be trying to make identity itself efficient. One of the things I've noticed is that currently anti-money laundering practitioners who wish to improve have got insufficient feedback for all the big data claims that are made. They're not getting back from the authorities what are the things that they're looking for and what methods actually resulted in useful information, whether that be terrorism criminals or tax evaders. It's very, very difficult. And the industries themselves find that they are trying to please the regulators so they can get on with their other work, frankly, by fobbing them off with reports and data structures and far too many suspicious activity reports that are justified by the underlying data. And we've got ourselves into a bit of a dance where one side is trying to please the other and the other side believes that something suspicious must be going on. So these regulated industries won't change or implement at the moment without some type of regulatory whipping, but the regulators won't whip without some media whipping, which they get from time to time as some criminal or terrorist has found a bank account or been able to fund something. But this media whipping then produces unintelligent and absolute solutions. This must never happen again. Well, it will happen again. It's a risk-based world. The question that we're trying to do is to manage that curve of risk and reward and pick an appropriate level where the cost involved in the system is justified by the results that it obtains. We need to inject sensible economics to promote sensible cost-benefit analysis. Unlike many of these talks, I'd like to just get into a teensy bit of detail, if I may. And I have here some suggestions. Well, the first thing is that I decided with my brother Sheriff to use my year of 2019 and 2012 to look at strengthening and simplifying anti-money laundering. That has been one of our major themes. And we've held a number of events at the Old Bailey and virtually online with supporters such as the Financial Services Group of livery companies who have set up an AML task force to help us promote some of these thoughts this year. And here's some things. Firstly, test sets. Why can't the authorities put up a series of test sets on real results that people who are interested in using AI, big data, statistical evaluation techniques are capable of running their systems against it to see what's happening? Now, there have been a few efforts in this space, I grant, but they haven't been methodical and they've been very static. This should be a dynamic process. We should be looking at things like suspicious activity report SARS, feedback, encouraging law enforcement officials to provide more feedback on SARS which help and which don't help. Uh, Perhaps a test set of good SARS and bad SARS, to go back to my first point. Interestingly, Jim Richards, the former global head of financial crimes risk management for Wells Fargo, usefully asked last year, can we produce fewer alerts and have it cost less and investigate fewer cases and file better SARs? The answer to that is maybe. We don't know what a better SAR is. We should be thinking about using accreditation, a risk-based approach used in many industries, ranging from airlines to the oil sector, transportation, electricity, lighting. These are voluntary standards markets, such as those administered by the United Kingdom Accreditation Service. You might know them as kite marks, so kite marks on various things. So can I go up to an institution's door and it might tell me that it's a very, very secure institution and getting a good kite mark from the authorities, but it might also sign up to the AML processing kite mark. If all of your documentation is in order, you should be able to open an account here in X minutes, say 15 minutes. We could be looking at government digital certificates more widely. A large part of the difficulty is that most governments have failed to implement the ability to digitally sign and send you information that is effectively yours. So should we be looking at doing this as a matter of course for any government transactions? So for example, I've got an export certificate, tax returns, my driver's license. What is wrong with sending me a digital copy of my driver's license? I'm only going to take it, scan it, take it to an actuary, and have them certify it. Far better that the government proves that it was actually issued by the government. So a number of areas there where governments could do this. And in fact, oddly, the COVID-19 pandemic that has caused us to be unable to meet together this year gives us opportunities to change and shake up some of those systems. We should be encouraging data sharing among certifiers. And here I mean people who have gone through it and given you an AML clearance. Why can't you use that elsewhere? So you've gone and gotten cleared for AML with your accountant. Why can't your lawyer use that data? But to do that, one, they'll have to exchange data. And two, I'm extremely conscious that they're also therefore sharing indemnity. And this is a difficulty. But could we get together types of indemnity pools, perhaps with charges and insurance? So if I've done it for you, I get some recompense for going, but I take a risk as well that if it turns out I did a poor job, I owe you some money of some form. I also think we should be encouraging discussion among regulators about fixed fines. So, for example, in line with indemnities, could the regulators have a predetermined scale of fines? For example, £1,500 per incorrectly onboarded client. This would encourage better information sharing, but it would also permit robust cost-benefit analysis. At the moment, if I get allow one major terrorist through, I might be fined quite a significant amount. But to me, when I was processing, it was just one person. I could, on the other hand, let thousands of people through, and the authorities might think, well, that's kind of low level. So I've got no ability to do cost-benefit analysis when, in fact, the cost might be infinite. So far better to say this is the rate. Now, it might turn out, as I said here, £1,500 is far too light. Then the authorities can adjust the scale of the fine. It could turn out it's far too heavy, and they can adjust it down. And going back, I think, therefore, to my earlier point about market-based mechanisms. And finally, amnesties. I think we need to find ways of effectively dusting complex situations that got them out of hand under the carpet and agreeing directly with the financial institutions what they're going to do going forward rather than spending time on forensics. So, how can we cooperate? Well, I believe there are some basic forces, economic forces, that we should be amplifying. Anti-money laundering and know your customer rules should promote trade, not hinder it. Fighting economic crime should ensure that account opening and switching will be easier and smoother, not harder and more complex. In the UK, with Brexit here and a deal looming or not looming at the end of the year, we need an answer to the question, if Britain is open for business, why can't I open a bank account? Borderless business Britain needs an infrastructure, perhaps based on smart ledgers, that promotes competition and gives consumers the control they need. Secondly, we should be clear about which sort of model we wish for individual rights. What do we want to back? The Chinese and Indian models seem to be primarily about state control of citizens' data. The European model of GDPR stems from granting and enhancing individual and consumer rights. And the US tech giant model is, so far, anarchic. I would like to live in a GDPR inspired world. I think most citizens and consumers would, if they think about it, desire the same. The European GDPR model could be more strongly integrated in companies seeking to promote themselves globally to consumers as safe. And this requires government support for these types of semi-transparent systems. The EU, hopefully, along with the UK, should be promoting this model as a global exemplar. And finally, there is an interesting moral dimension we should push more strongly, our obligation to promote free markets. Once we've chosen a market-based approach, and that is what finance is about, it's about the money, we need to make it work. We need to work on the positive aspects, connecting buyers and sellers, standards and standardization in goods and products, pricing and information, settlement and execution, and enforcement. We need to show society that this model is better than the alternatives, such as command and control, state control, or a monopoly. We all share a responsibility to promote free markets that we seem to be shirking in this space. Let's bring the economics back. Thank you. May I say, I look forward to seeing many of you in Cambridge next year.